Good morning, Mr. Bruno Langfritz, Senior Deputy Governor Dr. Veerasinghe, the President and Office Bearers of the Sri Lanka Forex Association, ladies and gentlemen. Let me say that it's a very great pleasure indeed to be here with you at the 58th ACI World Congress in 2019. I would like to thank the ACI Financial Markets Association for hosting this prestigious global event in Colombo this year in collaboration with the Sri Lanka Forex Association. I think I met Mr. Langfritz a few months back, and there were some issues that needed to be sorted out, and I'm glad there have been, and it's a very great pleasure to have everybody here in Colombo. It is indeed a privilege to be here with such a diverse group of market professionals, regional regulators, and policymakers from around the globe. Those of you who have come from abroad, we greatly appreciate the confidence and support you have demonstrated in Sri Lanka and in its people. Let me also record our appreciation for the efforts of the ACI Financial Markets Association, which has been enhancing best market practice and supporting market participants to adhere to the principles of ethical conduct across the globe through the ACI Model Code since 1955. Equally, the Sri Lanka Forex Association has been at the forefront of developing the domestic foreign exchange market over the past 36 years. It has been one of the premier associations with which the Central Bank of Sri Lanka has worked in developing, promoting, and stimulating innovation in financial markets. Today, the global forex market constitutes the largest and most liquid financial market in the world. It operates on a 24-hour basis around the globe with a trading volume of 6.6 trillion per day. We live in a world where the pace of change is accelerating exponentially. In addition, geopolitical tensions, including trade tensions and slowing global trade, a world economy with a new normal of low growth and muted inflation, as well as financial and asset markets whose volatility is driven by the 24-hour news flow, all these combine to pose constant challenges for market participants. In such a context, very high priority needs to be attached to strengthening resilience in emerging and frontier markets to cope with rapid and turbulent movements between risk-on and risk-off market phases which generate elevated risk and uncertainty. This volatility and the increasingly interconnected nature of global financial markets brings ethics in the global financial industry to the fore. There is a universal role to be played in supporting trust, integrity, and transparency. The premium attached to this is even higher when uncertainty is elevated and widely prevalent. The theme the ACI World Congress has chosen, Discovering the Role of Markets in the New Paradigm, is timely and very pertinent. It highlights the important aspects that need to be considered in strengthening the global financial markets to address the new paradigm shift in order to meet the challenges ahead, as well as to promote new opportunities. In today's world, sentiment and confidence often drives markets to a greater extent than the underlying fundamentals. In such a context, the ethical dimension assumes even greater importance, as unethical actions can have a disproportionate impact on markets when they tend to be inherently unstable. In the local context, the Central Bank of Sri Lanka has taken actions to strengthen macroeconomic policymaking and to improve financial market resilience to address global changes and local demands. At a time when the exogenous risks emanating in the global economy are elevated, clearly it becomes even more important to ensure that we have clear frameworks in place for policymaking which help to minimize the risks being generated in the local economy. And with a view to achieving this, the Central Bank and the government have been working together to put in place 4 frameworks that have been created to strengthen macroeconomic policymaking. These include a flexible inflation targeting regime for the central bank, supported by a new foundational law for the central bank, strengthening fiscal rules, by amending the Fiscal Management Responsibility Act, having a clear framework for the exchange rate, and also strengthening liability management. And for each of these, a framework has been put in place. I'm not going to go through all four. Many of you have heard me talk about these things several times, but so let me focus more on what is of direct relevance to you in terms of the flexible inflation targeting and management of the exchange rate. Now, the new act that is in the form of a bill at the moment, which is going through the system and hopefully will be presented to Parliament in a few weeks. The new Central Bank Act is based on two pillars, that is increased autonomy and accountability. And the flexible inflation targeting regime will be embedded in it. Clearly, already we have transitioned a long way to becoming a flexible inflation targeting economy. The central bank has been pursuing a forward-looking, proactive, data-driven monetary policy. So the law will essentially embed what is already in place and give a very clear signal to markets at home and abroad what the framework will be for monetary policy formulation. Now, more directly of interest to you is the way the exchange rate will be managed. Of course, within a flexible inflation targeting regime, the exchange rate is the first line of defense against exogenous shocks. It is the shock absorber. So we have already started managing the exchange rate in a flexible way. I think it's fair to say that we have now transitioned from a flexible crawl to a flexible management of the, a pegged crawl rather, a transition from a crawling peg to a flexible management of the exchange rate. It is not an entirely free-floating system because we do intervene in the market to smoothen disorderly adjustment. By that, we mean that when there is adjustment which is not well aligned with the underlying fundamentals of the market. Our FX market on a daily basis accounts for transactions between 50, 60 million USD to 100 million. So in such a thin market, you can get a great deal of volatility on a day-to-day basis. So the central bank will certainly intervene to smoothen the flow of the market when there is, as I said, disorderly adjustment. Otherwise, we will manage the exchange rate flexibly, and we certainly won't deplete our reserves to defend a particular level for the exchange rate, neither nominal nor real. So that's the way the exchange rate is being managed. And I should also say that we have had as a key objective the increase in the volume of reserves and an improvement in the quality of reserves. Reserves at the moment cover about 5 months of imports. They are about 7.6 billion US dollars, which for us is a pretty comfortable level. And that is the kind of level we want to keep reserves at. But not only do we want to have reserves of 4.5, 5 months of import cover at a minimum, but also the quality of reserves have been improved. There was a time when we did have 7.5 billion US dollars worth of reserves, but at that time, short-term swaps accounted for about a third of that, about 2.5 billion US dollars. We have now brought short-term swaps down to 600 million or less, I think. It's even less than 600 million now. So it's less than 10%. 7.6 billion reserves, short-term swaps now, I think about 500 million or so. So we've had an increase in the volume as well as the quality of our reserves. So we feel we are getting there in terms of having a framework that will give us resilience in this uncertain world. We have a number of other things that we are doing also to strengthen the FX market. In addition, the Central Bank of Sri Lanka plans to introduce an IOSCO-compliant FX benchmark in 2020 as a step forward in improving transparency and efficiency in the domestic foreign exchange market. We believe that this would enhance price discovery in the market while building investor confidence. In addition, as a positive move towards embracing the new norms of the financial markets, the central bank is promoting market-wide adoption of the FX Global Code to promote commitment among market participants to adhere to the principles of the code. CBSL has implemented a regulatory framework on market conduct and practices to all licensed banks in line with the FX Global Code, with a view to promote sound market conduct and practices for treasury operations, as well as to strengthen market risk management systems. The framework covers all market dealer functions in rupee and foreign currencies and is applicable to all employees engaged in treasury operations and KMPs in charge of treasury-related functions. The regulatory framework includes the required policies and procedures relating to treasury operations, responsibilities of the board and senior management, risk monitoring and control, a framework for limits, ethical market conduct, confidentiality, recording of deal conversations, foreign exchange trading activities, professionalism and required knowledge, the role of the internal audit function, as well as sanctions on non-compliance. This year's ACI World Congress has much to offer that would provide insights to develop a forward-looking and proactive agenda. The opportunity is there to acquire insights on the outlook for 2020. In addition, there are sessions featuring eminent industry experts and analysts covering a diverse spectrum of emerging and timely topics, such as cryptocurrency, blockchain, AI and machine learning, as well as the BIS FX Global Code. It is a full and topical agenda. I wish you well in your deliberations over the next 2 days. I'm sure they will be productive and fruitful. Thank you very much.